Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day. It is time for high probability short term profits with the one, the only Mike Wade. Let's get things going here in 5, 4, 3, 2.
Ryan, wow, thank you. I feel pressure. I gotta be impressive here. Well, I'm not gonna be impressive. Ryan, Nvidia is impressive. We're going to talk about Nvidia today. Huge blowout earnings announcement. It's moving the markets in an upward direction to further all-time highs. It's like birds are singing. There's rainbows and sunshine in Nvidia's world, and it's taking the tech market with it. So we want to look at that, look at the impact on the tech sector. We have a live trade for today, and guess what? It's going to be on Nvidia. There's a few others we could look at as well. We'll look at last week's trades. We'll look at our portfolio. Ryan, we're up. We have 18 straight winners.
Yeah, 18. I was going to say, you said that my intro was impressive. Like, let's talk about that win streak really quick.
Yeah, we're going to take a look at it here. We've had 18 straight wins. That would be over the course of about 4 months. We haven't had a loser in. It is phenomenal. Actually, let's put that graphic up, Ryan. If you have it there, we can talk a little bit about the performance here. You know, we've had 18 trades. That's our 18 winners, 100% winners. The average hold time in these trades is 5 days, and the average profit per trade is 14.69%. All right, now 14.69% may not sound like a lot. But if you can do that every 5 days, you could make 14% 4 times on the same money. And then you start getting into what's 4 times 14. You know, it starts to get a little crazy, like 56% return every month. What? Have you ever in your life made 56% in a year? Most traders would say no. Not here, though. This is our strategy. It's high probability. It's short term. We're in, we're out. We're sniping from a relatively safe distance. We're getting on base. Pick your analogy. Moneyball's my favorite. Get on base, get on base, get on base. We don't need any home runs. Just get on base safely and let the profits stack up. So Ryan, I'm starting to get a little nervous because when you get a win streak of 18, you start wondering about, well, when's the loser coming? And let me sober us up just a little bit. We will have a loser. We lose about 1 out of every 10 in this system. These results have been derived over a couple of years doing this show live in various forms. So this is what we do here. It's high probability. It's short term. All right. So I'm very happy about that. Let's take a look at the markets. We got 11 minutes before the markets open. And by the way, we'll look at Nvidia here in a minute. But if you have a trade you'd like me to look at towards the end of the show, please pop it down below in the chat box, and Ryan will bring it to the table. All right, so this is the S&P 500. It's the SPYs. It's an ETF. What's that mean? Exchange Traded Fund. Another way to think of it is it's a stock that tracks the S&P 500. All right, so what's been happening over the last 5 days is the S&P 500 has been topping. All right, right around 530. These round numbers, lines in the sand, I call them, tend to exist at round numbers. In this case, right around 530. All right, so that's the S&P 500. The NASDAQ, which is predominantly tech stocks, has been a bit more aggressive. So all of it, that's an all-time high as of yesterday's close. And then Nvidia happened last night. Let's talk about Nvidia. Let me pull up the stock chart real quick here. Nvidia blew out their earnings with great enthusiasm. I mean, this is like one of the best earnings announcements I've ever seen in my life. Nvidia, there's a little graphic here. Nvidia shows no signs of AI slowdown after a 400% increase in data center business, a 400% increase. They've also announced a 10-for-1 stock split. They've also increased their dividend by 150%. This stock is on fire. After the 10-for-1 split, this will be $100 stock roughly, and then retail traders will come in and buy this stock at a much cheaper price. So all of it spells upside for Nvidia, but also it spells upside for the S&P 500. Let's go back to that chart real quick here. The S&P 500, let me turn off Elliott Wave here. We don't need that right now. The S&P 500, because Nvidia constitutes about 6% of the S&P 500. It's the third highest weighted stock behind Microsoft and Apple. Same thing on the NASDAQ. So where Nvidia goes, in other words, so does the SPYs and so does the Qs. All right, so solid bullish prognosis on the markets and of course on Nvidia. And then we can take a quick look at the futures here with the markets opening in 9 minutes. You can see here the S&P 500 is up 0.65%. That's the futures. That's about where the S&P 500 will open in just about 9 minutes. The NASDAQ is up 1.12%. Before the markets even open, they will open higher. All right, so the futures are telling us what to expect at the market open. All right, so we're going to come back to that in a minute, and I want to do what I can to get this order on before the market opens. Let me tell you why. Everybody wants Nvidia options right now. A lot of us retail traders, that's what I am, that's what you are. You might be a professional, I don't know. They want some Nvidia options. There will be a big book of orders. Market makers will be filling those orders. It'll be a veritable feeding frenzy. And what does that mean for us? It's like dropping a hook in the water of a school of fish that's feeding. You don't even need bait necessarily. So we're going to capture what's called implied volatility, which is expense of options that are driven up by demand. All right, so that's the reason we do this show. We start at 15 minutes before the market opens so that we have the opportunity to capitalize on a feeding frenzy that's about to occur here in just a few minutes. Before I do that, though, let's go through our recent closed trades. We did Walmart last week. Walmart came out with amazing earnings, and we sold a credit spread at 61. We got 10 cents a contract. We did 5 of them, so that gave us $50 on 450 in risk. We closed that trade just 5 days later for a penny and netted 10% on that one. That's a winner. Beyond Meat was another that just got closed down on the 22nd. We bought this one back. This was bad earnings. Then we had our meme rally that failed. We didn't get out. Our exit rules are to get out at the short strike, which in this case was 9. Our line in the sand was 9, right just below that blue line there. We didn't close there. We hung in, and the stock dribbled back down after the meme craze died out, and we closed this one down for also a 10% profit. And then we have one more that's currently open, and this one is on Cisco. All right, Cisco had great earnings. They blew it out, and then they tanked. And then 47 held. Cisco closed right at 47. We held. The stock is bouncing today. Yesterday, it will bounce again today along with the tech rally. And this one, we have 16 days left in this one. And this one has a very good chance at this stage of profiting. So we'll have to wait and see. This could be a loser. Who knows? But we'll have to wait and see. The rules are simple. We place an order to buy the spread back for 10% of the original credit and net 90% of max profit. All right, so the rules are very, very simple. If the stock closes less than 47, which are our line in the sand, then we close it out there. Okay, so that's our basic rules that have been used to generate this amazing performance. Okay, now let's go. You know what we should do here, Brandon? Let's talk about my guidebook. Because I just went through a lot of stuff. Credit spreads, lines in the sand, buying the spread back, selling the spread, doing 5 spreads, position sizing. It's a fast game, and once you learn it, it's easy, it's fun. It's like playing Monopoly, but it's a million times more what's the word? Um, Gratifying. That's the word I was looking for, gratifying. And so there's this guidebook that I put together. It's a 5-step process. It's detailed with great precision in my estimation because I wrote it. It'll walk you through all the steps that I do here live every Thursday morning at 9:15 Eastern. So grab the guidebook. It's free. My intent with this system is to share it with those that want to have trading work in their lives. There's other types of strategies that I like, but this is one of the simplest, most brute force, high probability systems that I have, and I want to share it. So grab the guide and then read it. Come to the show Thursdays at 9:15, and you can trade alongside me. All right, we got 4 minutes. Let's go to Nvidia. We actually already had a winner on Nvidia this year in the last earnings announcement. And here is Nvidia. Okay, Nvidia is due to open over 1,000. All right. Now, in this particular case, we have a beautiful line in the sand. It's right at 950. So what makes this a good line in the sand? We could call it a support and resistance level as well. Here, 950, stock turns around. 950, stock turns around. 950. Nope, 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 nope. Today, though, the stock's going to open up above 1,000 because of all this great earnings. And I anticipate that this stock will rise beyond, I think it's over 1,000. I'll have to check here in a minute. But I'm anticipating this stock running strongly from here with all of what I just mentioned. The 150% dividend increase, 10-for-1 stock split. Great earnings, sales increase, 400% increase in data center business. People are digging Nvidia. It feels a lot like the dot-com bubble back in the late 90s, 2000 era. That's what it feels like. So here's my line in the sand. I want to sell a credit spread that makes money anywhere above 950. So with the stock above 1,000, if the stock keeps going, we're going to make money. If the stock goes sideways and stays above 1,000, we're going to make money. And by the way, 1,000 will be a strong support level because it's 1,000. It's 1,000. 100s, 1,000s. Those increments are generally very strong support and resistance levels. So we have the stock is not likely to come below 1,000, but even if it does, it can drop all the way to 950 and we'll make money on this trade. Ideally, we make 10, 15% over the next 2 weeks, provided Nvidia doesn't drop below 950. All right, so that's the logic of the trade, and then we have to build them. Okay, so let's go into a live simulated environment. I'm in Thinkorswim. I like to place these live for people. And you can see right here, Nvidia yesterday closed at 949.50, and the stock's at 1,019 as I speak. So we could go to 1,000, but I'm just going to hang out down at 950. Okay, so I'm in the trade section. Typically I go after 14-day options. So the June 7 options have 15 days of life in them. So those are the ones I want. And you can see down below here, I'm going to sell the Nvidia June 7, 950 put. And then I'm going to buy underneath the 945 put. The minimum credit I want on this one is 50 cents. And we're off. Now I'm going to put it in for $1 and fish just a little bit. All right, sell the 950, buy the 945 for June 7. Mid price is $1.12. We got to move fast here. $1.70. Let's lift this up to $1.10, $1.15. It's going to move around a lot. Let's try for $1. Let's try for $1. We're going to try for $1. See, it's a little fast. I know I'm talking fast. I'm getting excited. All right, we're going to go after $1.01. Go to monitor. Not there yet. Let me drop it to $1. And I'm going to let that breathe for a minute. So drop it to $1. Confirm and send. Now that premium will dry up fast. We might even drop it down to 50 cents here. That's the minimum I'll go. It's at 90. Let's go ahead. That's $1.25. Let's let that sit for a minute there and see if we get filled for a dollar. So I'll give it a few minutes, and then if we don't get the dollar, then I'll drop it to maybe 75 cents, and we just got it. They gave me $3.25 for that. That's just crazy. This is the kind of stuff that can happen, though. So in a simulated environment, we sold Nvidia June 7, 950 puts for $12.30. We bought the 945s for $9.05. And they gave me a $3.25 credit, which is phenomenal and not available unless you're trading at the open. This thing will dry up fast. So let me just show you what we did here. I'm going to take you to a little nifty spreadsheet. This is exactly what we did just now. Sell to open the Nvidia, June 7, 950 put. Buy to open the Nvidia, June 7, 945 put. And we just got $3.25. Okay. Now I'm going to show you the math of that, and let's do that first. And then I want to talk to you about exiting the trade for either a loss or a profit. I'll go to calculations. Now, this is what just happened. These calculations are in the guidebook, so please get the free guidebook and read along here. So this is out of the guidebook. All right, so the width of the spread is the distance between the strikes. All right, so this spread is $5 wide. So that's the width of the spread. And the max risk in this, so that's the spread width, 5. The max risk is calculated by taking the width of the spread minus the credit. We just got $3.25 on that. All right, so the max risk then is 5 minus $3.25, which is $175. That's our max risk. Now, $175 in max risk translates to $175 of total risk per contract. The credit we just got was $325. So the potential return on investment is dividing the max risk by the dividing the credit, by the max risk. Right up here, Mikey, read that. So our potential return on investment in this trade is 186% over the next 14 days, 15 days, provided Nvidia does not drop below 950. Back to the chart. So an 186% potential return on investment provided, let me use some graphics here so you can really see this, provided Nvidia, which is way up here above 1,000, does not drop down to 950. 186% return on investment in the next 15 days, provided Nvidia, which has zero reason to drop from here, does drop. As long as it doesn't drop below 950, we are good on Nvidia. So that is a phenomenal trade. Immediately, once you're in, it's important then to have your trade management rules embedded in your DNA. The most important one is if the stock closes less than your short put in this case, our line in the sand at 950, if Nvidia does in fact close below 950, then buy the spread back. Close it. Close the trade. You'll take a loss, but it'll be contained. Most important rule in trading is that. Manage your risk first and let the profits happen as a consequence. Now, the other rule is to collect your profits when you can buy the spread back for 10% of the original credit, and then you set that order as a GTC order, good till canceled order. So in this case here, you'd put an order in to buy the spread back for 32 cents, which is 10% of $3.25. Just move the decimal over one to the left. So 33 cents GTC. And then forget about it. You don't have to do anything unless the stock closes less than 950. and then go find another one. So now I'm going to go back and see what that spread is currently worth on Nvidia. Look here already. And again, this would not be available had we not traded the open. Because right now, with one contract, we've already made $260. Now, I'm going to just show this to you. So here's the order we got in for 325. That's a credit. That goes into your account. I'm going to right-click that and create opposite order. And I'm going to put an order in to buy this sucker back for 33 cents. All right, so this is the inverse. You're buying the put that you sold. You're selling the put that you bought. You flip the battery in backwards, swap the buys and the sells, and then set a limit price of this one or this one at 33 cents, and you make that a GTC order. And then I confirm and send, monitor, and then right here, I can see here, look, the spread is right now worth 72 cents. Now, if you're not in the trade and you want to get in the trade, if you can get 80 cents, get it. 50 cents is the minimum credit. Anything above 50 cents is good. Already, it's worth 80. All right, so we could buy the spread back for 80, but let's give it some room. Let's let it breathe. Let's follow the rules. And this one, ladies and gentlemen, looks. I got to be careful whenever I get pound the table with this one's going to be a winner. Sometimes that doesn't work out. So I'm not going to say it, but the probabilities are immense. Here's the current chart on Nvidia. It's well above 1,000. It's not even going to probably drop below 1,000. We're in, we're out. We've sniped from a distance. We've gotten a large potential profit on this trade. 186%. It's the best credit spread I've ever seen in my life. In my life. All right, Ryan, let me calm down a little bit. Okay,
Ryan. Man, that was intense. I'd be sweating over here. I'm actually sweating.
I am too. Feels like, well, I was going to say it feels like stealing, but I didn't say that. Okay, Ryan, we got some time here. Hopefully people are enjoying that Nvidia trade, but do we have any other potential stocks to take a look at today?
Not seeing any quite yet. You want to just kind of talk a little bit more? Wait. We do have Dell from Tony. It's a Dell 125/124p at 10 cents CR.
Okay, let's look. So Dell, they're going to, all the tech stocks now are going to be popping up in sympathy. Dell certainly did. Now, just because Nvidia is going up doesn't mean Dell is. It's a AI, anything AI related. Dell's got I'm sure they have an AI stance. So yeah, I find it very attractive. I would say 140 on this one would be the safest place. I don't know how Dell is Dell going to continue? Is it going to pull back? There is resistance right up here at 160 where it's wrestling with. So that could hold and drop Dell down. So I would be cautious about that because it's bumping its head against a round number, 160. So what happens sometimes is people say, wait a minute, Dell isn't going to benefit from NVIDIA's AI boom. And then the stock comes down. So you got to be careful there. 150 would be too close for me. I would consider 140. And then, of course, we want to make sure that we check the news. Is Dell going up just because NVIDIA is going up? Is there any other reasons? Yeah, I'm not seeing any news for today that's particularly super duper slam dunk attractive. So I like Dell, but I wouldn't do Dell and NVIDIA. If you want to do a tech stock, do NVIDIA. Don't do NVIDIA and Dell, because if NVIDIA drops, Dell will drop too. You don't want to double up on the same sector. So I would avoid Dell, although it's a very interesting stock. Here's one that I saw this morning as well. And this one's on VFC. VFC is a clothing company, Timberlake, that kind of clothes. There's another couple in there. I can't remember it right now, but this stock has come down hard. Okay, let's check this out. VFC. Oh, heck, let's just do 2 today, shall we? Look at this. So they make vans in Timberland, and let's see. So VFC reports Q4 loss, misses revenue estimates, posts loss as demand sags, miss revenue estimates, stock drops. So VFC is interesting to me. And the other thing that I'm going to use Thinkorswim's news here because it's more granular. But the other thing I like about VFC is that they got a sell recommendation. What? Sell recommendations are actually quite rare. Let's see. I thought I saw a sell recommendation in here somewhere. Okay, so it got downgraded by Telsey Advisory, downgrades VF market perform from outperform. So it got a downgrade there. And I could have sworn I saw a sell recommendation this morning, but I'm not seeing it right now. All right, so bad earnings, downgrades. I like this one. Let's go see we could put our line in the sand on this one. Let me go back to the Hub software, and I've already drawn it. So the stock is now bouncing off 11. You see that? Let me show you. So 11 is support. All right, now it's already starting to bounce. Is it going to get back up above 12 where it was yesterday? It was above 12 yesterday. This level is now support or resistance, excuse me. This now is a resistance level. It should keep the stock from rising above 12 with the bad news, but we could be a little more conservative and say, I'm going to make money on this one anywhere below 1250. You could even go to 13 on this one, but I think 1250 would be good right about there. Okay, so we're going to do another one on VFC, and what I want to do is sell the 1250 call and then buy the 13 call. What's he talking about? I don't know what he's talking about. Get the guide. Get the guide. You need the guide. It's free. Please get it so I can be more comfortable because I don't want to confuse anybody, but we want to move a little bit fast here. So I want to make money below 1250. All right. So then I go to Thinkorswim here in a live environment. I type in VFC, and then I find options that are about 14 days in length. Again, the June 7s that we just used with Nvidia. And then I find my 1250. And I'll make this a 1250, 1350. I see 8 cents there. I want 10. All right, 10 cents is 10% of the spread width, which is $1 wide. So I want at least 10 cents. And there it is. It just showed up. And I'm going to do 5 of these. And I'm going to ask for 10 cents. And then I'll either get filled or not. Confirm and send. Send. So I'm going to fish here. I'm not going to get aggressive. I'm not going to move my line in the sand. That's my trade. Give it to me or not. I'm going to let the trade come to me. That's the trade I want. You only want to give me 5.5 cents? Okay. I'm waiting for 10. Give me 10 or nothing. So here's the trade I just did. I'll put it in the spreadsheet so you can very clearly see it. 1250 VFC. And we want to, now we're going to sell the calls now. We use calls if we're bearish. And we use puts if we're bullish. So we're going to sell here the 1250 call, and we're going to buy the 1350 call. And we want to get a net credit of at least minimum, no more, no less than this. 10 cents. Oops, hold on a minute. 10 cents. And then we're going to close this trade if the stock closes greater than our line in the sand right here. This is our line in the sand. And give it a color. That's our line in the sand. And if the stock closes above 1250, then we've lost money. We close it out. We keep our losses contained. Otherwise, we put an order, not otherwise, put the order in to buy the spread back for 10% of the original credit, GTC. All right. I think we just got filled. Let me check. I heard a bell. Just got it. We just got it for 10 cents. There it is. We sold the 1250 for 19 cents, bought the 1350 for 9 cents, netted 10 cents credit. Immediately, once you get filled, create the opposite order. And then this is going to do the exact opposite of what we did. And then I'll put the order in to buy this back for 1 cent, which is 10% of 10 cents. Good till cancel. Confirm and send, send. And now I've got 2 trades rolling. The Nvidia credit spread is now down to 65 cents. We are not far away from closing this down for 33 cents. Quite likely that happens today if Nvidia keeps on rolling. Let's see what it's doing now. I'll go back to Nvidia. Yeah, it's at the high end of its day. It's at 1,040. So there we go, Ryan. One of the best sniper trades I've ever seen in my life. I'm glad we did it here on the Hub channel. So with that, Ryan, any other stocks we could look at quickly?
Yeah, we got TITN and then another one right after that if you have a little bit of time.
Yeah, I do. As you can probably tell, I'm having a lot of fun. I love this. This is my... Oh, baby. Bad news. We'll find out what in a minute. This stock has tanked. Why? Technically speaking, I would, without even checking news, you could have a good shot of making money below 24 on this one. But I want to check the news. Maximizing probability. What happened to Titan? Titan Machinery. We can check the news here. By the way, I'm in finance.yahoo.com. You can get earnings from a lot of places, and this is just one of them. Your broker has earnings as well. Let's see here. I'm going to do this live here. Announced earnings. Just reported earnings. Not seeing what I need to see here. So now I'm going to go into Thinkorswim. And I'm going to go into Titan. There's a lot more granularity in their news here. So now I can see. There we go. There we go. That's the kiss of death right there. Titan Machinery lowers its FY25 EPS outlook to 225. Lowered future guidance. Lowered future guidance. They missed on their sales and EPS. So they missed on earnings. They lowered their future guidance. Is there any reason at this stage for Titan to come back from whence it came? Is it going to pop back up to the 23? Doubt it. So what I'm going to do here is where I would like to, well, I'd like to sell up here at 24. All right. So if we have our line in the sand at 24, then we make money all the way down to zero, all the way sideways. And even if the stock rises by about $4, we'll still make our money. The question is, though, do we get enough credit? And so I'm going to find out. I don't know. I got to find out. Should have done this first. So the option chain for Titan, the first expiration available is the 21st of June, which right there, you can see it on the top of my arrow there. That's a 29-day trade. Too long. Short term. That's not short term. A month. Not doing it. So I'll pass on Titan, but it's still a really good setup. Unfortunately, there's not enough granularity in the expiration dates that are available for this particular stock. Do we have another one, brother?
Yes, sir. We have one more. It's SNOW. That or Ancient Foggy is saying that it is currently snowing outside, which could be.
Yeah. I love it. Now, let's check the news though. So when I said I love it because we have this blue line here, which is the 200-day average. It's, other than round numbers, 170. So 170 is a very strong resistance level. The second strongest, most resistance level on this chart is the 200. So if I get a stock that's close to the 200 and I can put my line in the sand on the other side of it, let's say 180 or 175 right here, then I have this mega strong resistance level keeping me safe. All right, so the stock could recover, but it's going to have trouble getting over this blue line. And if my line in the sand is on the other side of it, then I have a nice level of protection. So if you can sell on the other side of the 200-day average, put your line in the sand on the other side of the 200-day average, your probabilities of profit increase. So that's the reason. Now, what happened with Snowflake? It did start up. I checked this one this morning as well, and they actually had good earnings, from what I remember. Let's see. So this is what's confusing about this one, and this happens sometimes. They miss their Q1 earnings estimate, but the stock jumps on better than expected revenue and sales guidance. So they're lifting their sales guidance, and they made more money than expected, but they didn't make as much net earnings per share as was expected. And so Snowflake on the open gapped up, but not enough power. The lifting of the sales guidance and higher revenue than expected didn't hold the day, and now the stock is dropping. So the news was somewhat mixed, and for that reason, I would say stay out of this one. But ideally we want something like Nvidia, where they blow out their earnings, they lift future guidance, they raise their dividend, they do a 10-for-1 stock split. It's like rainbows, birds, and sunshine. Stocks going up. No brainer. This one is mixed, and so for that reason, I would avoid this one at the moment. If I did anything with it, I might do an iron condor. Maybe I do a credit spread underneath and a credit spread above. But this one doesn't line up perfectly, and for that reason, I'm going to pass on Snowflake. Wait, we got one more?
Nope. We are good.
Okay. All right, I need to go meditate, man. I'm jacked. All right, everybody, that's our call for today. If you like the Nvidia trade that I did today, go after it for 50 cents. That's good. That's a good 10% profit right there as well. So if you missed the open, then still plenty of time to jump all over Nvidia. And with that, I'll wish you a good day today. Have a great week as well. Monday is a holiday, in case you don't know that, Memorial Day. But I'll be back next Thursday at 9:15 Eastern Time. Same bad time, same bad channel. Have a good day, everybody.